Good evening, everybody. On behalf of Edelweiss and Edelweiss Mutual Fund, it's my pleasure to welcome you to our first annual open house. Firstly, on behalf of my team, I hope all of you and your families are safe and well in whichever part of the country you are in. These are exceptional times, perhaps times that many of us have not seen before. So, your safety and well being and happiness is foremost to us, and I hope sincerely that this finds you very well. It has been a 15 to 16-month period where we all haven't had the opportunity to interact in physical platforms. In normal times, we would have met in various events across cities across India. But these limitations don't mean that we can't communicate. It's more and more important to communicate openly and transparently, and for you to know what is going on with your money from the people who manage it. And this annual open house, which we will make an annual property, is a step in that direction. Very simply, its purpose is to look through the last year for all our major funds and have our fund team tell you what we did, why we did it, what went right, what went wrong, because things do go wrong, what we have learned, and what the road ahead for us is. It's not a conversation about new funds. It's not a conversation about market outlook. There are many other forums to hear that. It's just a conversation about last year. It's also an opportunity for us to hear from you and answer your questions. And through the course of the evening in individual segments and at the end, we will be answering questions. So we encourage you to post all your questions and we'll take the opportunity to answer them as well as we can. Before we get started with the evening, I also want to extend on behalf of our team a special thank you to all of us. We began our journey as Edelweiss Mutual Fund, a few years ago, and the last 3-4 years have been years of exceptional growth. While the market talks about AUM growth, I think what we are most delighted is that the family of investors that choose to trust us with their money and the family of partners that work with us has grown and grown substantially. So we thank you for placing so much trust in us and for all the feedback that you give us. We also especially want to thank the many advisors who have logged into this call and the many advisors who work with us to guide you on our money. Our mantra is Advise Zaruri Hai, and our financial advisor community is the face of that campaign. Finally, I want to say that we are very open and committed to your feedback, and we continue to try and do things to make life better for you, whether it is an upgrade of the transaction experience on our website, which many of you commented on, whether it's more information on our product pages to help you make better buying decisions on our website, whether it's your new look account statements, the new emails. There's a lot coming. And I always say we are an AMC that is your AMC. We will grow and get better and prosper with your feedback. So do keep that feedback coming on anything that we can do. But thank you for all your support over the last year. Before we kick off with the investment presentations for the evening, we thought it would be a great opportunity to start this open house by hearing from Rashesh. Rashesh Shah, of course, does not need an introduction. He is our group chairman and MD of Edelweiss Group. I thought I could take the opportunity, he's given us his time today, to ask him just a few questions. So, Rashesh, welcome to the event. And if we could have Rashesh.
Hi, everybody. Thanks a lot, Radhika and the entire team and all of you. Very happy to be here, actually very honored to be here. And when you first told me about this open house concept and the purpose of this, I was very excited because I think, as you correctly said, this is not about investing or planning your retirement and all of that. This is truly an open house in that sense, where there's an open conversation, communication, also feedback. Hopefully, we'll get from a lot of our partners and investors and others. So it's truly an exciting event to be here, and I'm truly very happy that you are doing this, but very happy that I also got a chance to be part of this and enjoy this and experience this. As you said, the first of its kind. I do hope that this becomes an annual event and it grows and becomes an institution by itself. The Edelweiss Mutual Fund annual open house becomes an institution over the years as we go along. Thank you.
Thank you so much, Rashesh. And I thought maybe you could start. I think sometimes many people may not be familiar, but Edelweiss Group is now completing 25 years, and 25 years is a long time. It's a long time in markets. It's a long time in the company. My question is actually less about the past. How do you see the next 25 years for Edelweiss?
I think it's an interesting point because, and the last couple of years, just not the last 1 year with COVID and pandemic, but the last couple of years with the ILFS and the entire Indian financial services undergoing a structural change, I would think, has been, I think, the best way we could have ended our 25 years. And I do think this, I think ultimately a journey of building a business is actually many innings, one after the other. Is like I always say, when you run a marathon of 42 kilometers, you are running 1 kilometer 42 times. So I think this 25 years is, I only think, is the first innings in the many innings that we hope that we have. But I think it's been a great journey to learn. I mean, I started off as an investor, as an analyst, and we all talk about compounding. But these 25 years have also made you experience the real power of compounding. And I can give maybe a couple of examples. 25 years ago, the entire deposit in the banking system was about 5 lakh crores. Today, that deposit base is 150 lakh crores. So it's grown, from 5 to 150 in these 25 years. And HDFC Bank, which started 25 years ago, has more than 5 lakh crores now. So one bank is bigger than what the whole banking sector was at that time. And there are many examples like HDFC, which is one of the leading companies. Their total asset book at that time was about 3,000 crore, which is now more than 3 lakh crores. So I think there has been so much compounding we have seen, whether it is Infosys or TCS or all, or even the Indian economy. I mean, when we started Edelweiss, the Indian economy was, the size of the Indian economy was about $200 billion, which is now close to $3 trillion in US dollar terms, in spite of the rupee falling and all that. So I do think that the compounding story that we experienced for the last 25 years in India, I'm pretty sure will continue for the next 25 years. B, I think it's never been a straight line. I wish it were a straight line. It will, the hair on my head would be a lot more and I wouldn't have grayed so much. But in India, I think there is a long-term trend is fairly solid. And I think by any reasoning, whether you are a buy and hold investor or an SIP investor or whichever way you would have invested, I think making anywhere between 13, 14 to 18, 20% return would have been possible over the longer period of time in the markets. But unfortunately, or maybe fortunately, it's not a straight line. There is a zigzag that is there. And I think having seen the zigzag of last 25 years, having seen, India Pokhran blast, the Asian financial crisis, the technology bubble bursting, the 9/11, the change in government in 2004, the global financial crisis, the taper tantrum, the ILFS crisis. I think that there have been so many episodes of the last 25 years, and then you look back and say, you know what? In spite of that, growth happened. So I do think the next 25 years will be the same. The other good thing that happens in the life of a company and the life of an investor is we learn. Unlike normally, I mean, as we age, our bodies become maybe weaker and our capabilities become slower. But I do think if you can learn as you get older, you actually get better and better. And I think in the last 25 years, we have seen about 5 up and down cycles and very gut wrenching, very very deep kind of cycles. But every cycle has been a learning experience. And I think an investor or a business builder should always see everything as a learning experience. And I think what we have learned in the last 25 years, I do hope that we in Edelweiss, we put that in place and we use that learning for the next 25 years. You have to be better for the next 25 years than you were in the last 25 years, in terms of you will still make mistakes and there'll be cycles and there'll be unexpected events and you will get caught by surprise. But I think if you can learn and constantly learn, and that's the journey as an investor also, it's a constant series of learning. And I've seen a lot of investors in India. One of the other good thing has been last 25 years. I've seen a lot of all the well-known investors in the market. A lot of them have been friends or have been colleagues over the years, and seeing how everybody, the smart ones, get smarter and smarter after all the setbacks and after every cycle and all. So I do hope the next 25 years is going to be like that. We are still a fairly young organization. In Edelweiss, if you see, uh, we have 8 businesses across the board. So though I think everybody thinks of Edelweiss as one business, we in the first 25 years operated as one business with 8 divisions out there. Now we are one holding company with 8 independent, standalone, very powerful businesses. Like the mutual fund business is one of the 8 businesses we have. Each one has a lot of promise. The platform has been built, but I think the next 25 years is not going to be about Edelweiss, the one company, but Edelweiss, the many companies out there. And I think all the 8 businesses, and maybe hopefully we'll incubate some more businesses in the future, each of them is now actually raring to grow. And the good thing about this point at 25 years is all our businesses, whether it's a housing finance business, our alternating asset business, our life insurance, general insurance, our mutual fund, all the businesses are young. They've got the platform built. They already have 10, 12 years of foundation building behind them. And I do hope that the next 25 years is a path of journey and and the opportunity for flight for them. And Edelweiss Group as a whole, our idea is that we support each other but allow each business to have their own independent growth path, because the I think the opportunity is huge going forward.
Rashesh, you spoke a lot, about many things, including banking, mutual fund, and the opportunity for Edelweiss Mutual Fund. You also talked about lessons for investors. Uh, specifically for mutual fund investors, going through this period, what is your advice, having seen so much time in capital markets? And what is also your advice for advisors? Because we say advisory here. I know you are a big believer of that. So, what is your advice to investors and advisors?
Again, I think, as I said, the long-term returns in markets are always good, but on the short term is where it gets very hard, because every day there are TV channels, and then there are newspapers saying, at the end of the world is near or everything is collapsing. I do think investing is about 2 parts. One is what I call the intelligence of investing, which either you have it, or as we say, advisory. You can have an advisor who provides you the ideas and the intelligence of that. But it's also about emotions, and I think keeping your emotions in check, keeping your fear and greed, as they call, in check, is one of the most important aspects for the investors. So, as I was saying, I think investing is about both about ideas and intelligence, which either you can do the hard work yourself as an investor, or you can have a good advisor, as we say, advisor charuri hai. So I think you can get people to advise you. But the one important thing we all need as investors is to keep our emotions in check, whether it's greed and fear, or whether it's getting swayed, because there is obviously so much bombardment with the news channel and the newspaper headlines and all about how the world is coming to an end. So one of the other things I've learned about India is when things are good, they are never as good as they appear. But when things are bad, they are never as bad as they appear. So unfortunately, that drama that also fuels all of us, because investing is also about a lot of drama and all. So I always say that keep the drama as low as possible. It's a cliche to say keep your long term in mind, but I think a little bit of uh, inactivity or controlling your emotions, especially when there is extreme fear or extreme greed, like everybody wants to buy bitcoins or everybody wants to buy SPACs and all when they are hot and all. Idea is to stay, I would say, stable, or the word I like to use is as little drama in your investing as possible. Keep as little. There is enough drama going on in other parts of our life, and there is drama. I think uh, what goes on, all the events of the last 25, even the last 1 year has been horrible. I think as an individual, as a human being, what we are experiencing is really catastrophic in that sense. People are dying and there is virus out there. But in the long term, I think humanity, and in the long term, India has gone through all this. So I think that there is your financial health and your physical health. And right now, obviously, all of us are worried about the physical health, and we should be worried about that. But your financial health needs as little drama, as little quick moves. You can make very structured moves, very thoughtful moves, and use advisors, use all of that. Don't see a news item on the TV and immediately pick up the phone and call your advisor or broker to liquidate your portfolio, and things like that. I think those usually do more harm than help.
Thanks, Rashesh. And we've spoken about so many things, but given the times, the last thing I want to ask you to touch on is something I know you have spoken about to us as leadership a lot. And this is the power of human resilience. I know you've always said resilience is an important thing. So if you could just maybe leave us to end this segment with a few words on resilience.
Yeah, actually, resilience is a it's a very simple word, but can be a very difficult one. And I think it basically means, can you bounce back? And I don't know if anybody has seen either Batman, or if you heard Nelson Mandela. And then Nelson Mandela said, "It's not important not to fall, but it's important to get back every time you fall." And I think the same thing in Batman. There is that it's not important how often you fall, but how quickly you can get up. So I think for me, resilience has always been about that. It's not about not falling. Yeah, you want to avoid falling, you want to not make mistakes and all, but things will happen. Life is uncertain, there is uncertainty. You should do a lot of plans. So one of the things I always advise is plan and then go with the flow, because things will not happen as per your plan. But I think as you go with the flow, you can adapt. I think the last 1 year has shown to us that human beings, organizations, I think all of us have, transferred to work from home and this online format and all that. We are a lot more adaptable. We are a lot more resilient than we ourselves realize. And there are stories and stories of human beings, going through extreme times and and coming back. And I think one thing about resilience is, obviously, you need that inner strength and grit and all of that, which we all have as human beings. But the other thing you need is, you need an innate sense of optimism. Last, I think, I'm now today, 57 years old. In the last 57 years, if you look at most of the parameters of the world is a better place, whether we talk about gender equality or racism or tolerance. On every aspect, I think the human race has come a long way. It's still not enough. There are a lot of things we still need to conquer and all that. It's like, until 1980, women were not allowed to participate in a marathon, because it was assumed that they cannot, run 42 kilometers. So given where we were and where we are now, I think we have come a long way. It's still a long way to go. There are still a lot of areas where we need to work on being a good, equitable, species in that sense. But last, the human race has come a long way, and I think that optimism is the biggest ingredient for any resilience. That you think tomorrow is going to be a better day. It may not immediately be apparent to you, but I think even after, in the current situation where India is really in a bad place with COVID and all the heartbreaking stories that we hear, I think it's very important to not only handle the current, handle the present, but also keep your optimism about the future, because even this will come to an end. It will have its own cost. It will have its own, it will have its own setbacks. So even, I think falling down is not without cost. It is not without setbacks. It is not that, okay, I fell down and it's okay. You will get hurt, but you can bounce back. And I think the ability to bounce back is contingent upon this one small thing called optimism. And I think last 25 years and my career of 30 years, I've had enough things to see that, miracles happen in India. India was almost in the crisis of balance of payment in 1991, and it bounced back. And usually it is the darkest before the dawn in that sense. So I think keeping that hope alive, keeping faith, keeping optimism is very, very important. And I think investing is all about optimism. I mean, you are investing because if you are not optimistic, you will save money, but you will not invest money. And I've always said that there is a difference between saving money and investing money. To save money, you are worried about the future, but to invest money, you're optimistic about the future.
Thank you so much, Rashesh. I think that's a very hopeful note to end this session. And again, thank you so much for spending time with us today. It was just a pleasure having you.
Thanks a lot. Thanks, everybody. And great to be with all of you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.